because we have some very important, slightly medium-term to longer-term market issues to discuss. We have two of the conveners of the Emkay Confluence, Mr. Prakash Kacholia and Krishna Kumar Karwa, joining us to tell us what their plans are for this confluence and what is the main theme that they're going to discuss. This clearly will be an enriching experience for us as well. Mr. Karwa, Mr. Kacholia, thank you very much for joining us in our studio.
Thank you. Thank you.
This is on the eve of your big confluence, Mr. Karwa. Just tell us what were the themes you had in mind when you organized this.
First of all, thank you very much for inviting us for this event. And yes, we planned this event in the month of May, and at that point of time, you had a decent rally post the debacle of Jan, Feb, etc. And the sense that you had was that monsoons, after 2 years of continuous debacle on the monsoon front, the monsoons would be positive. Touch wood, it has turned out well. So the way we designed the conference was that we felt that post the Q1 numbers, and if the monsoons are decent, then investors would be very keen to understand how things can pan out, what can be the delta as far as the economy is concerned. And so we focused more on domestic consumption stories to be part of our confluence. Yes, at that point of time also there were question marks about what's going to happen on the Brexit front or whether the RBI governor would be on, off, etc. But those events have played out. I don't think so we even factored in the positives which would have happened post the GST legislation passing out. But now, yes, there has been very good momentum based on global liquidity, etc. And the kind of response that we have got for the conference has been phenomenal. We have almost 100-odd companies attending our conference over a 2-day period across market caps, across sectors, and there will be more than 3,000 plus meetings which will be conducted over a 2-day period. The investors would be across mutual funds, FIIs, domestic family offices, banks, insurance companies, etc. And the excitement is very high to understand that, okay, there has been a decent rally. How things are expected to happen in terms of the actual ground improvement in the performances.
Okay, yes, in fact, it looks very impressive, the number of companies that you have. And also, so many of them are wealth creators. You know, you have large caps like TCS, HDFC, Sun Pharma attending as well. But we also have Prakash Kacholia, market veteran, with us. Mr. Kacholia, good morning. You know, we don't get to hear your market view very often. Since we have you with us, start off by telling us what phase do you think this market is in, and what do you see as the trend for the market over the next 6 to 12 months?
Well, after the change of the guard at the center, I think the markets have performed very well. It's more, I agree that as of now, slight exuberance is there, but it's more because of the liquidity flow. I think post-Brexit, we have at least 2.8 billion FI flow into the country, which is a huge number. But if you see the amount of money that has come into the emerging market Asian countries is 20 billion plus. So I think we have received very little of it.
Okay.
I believe that the FI flow will continue, and I personally believe that for next 2 to 3 years the markets will be good. You see, we as a house, and the way our conference is also is constructed, we are more bottoms up than top up. Index may come off, come low, go up and come down. It does affect whatever we pick, do bottoms up picking, it does that. But sometimes when you talk to a long-term investor, he feels happy the markets have gone down. So he gets an opportunity to buy.
Okay.
So for us, we look at it that way. When you want to pick up stocks, small cap stocks which can give you a very good return, say it can become multi-baggers, we look for such opportunities.
Okay.
But as you asked, I think markets will be good for next 2 to 3 years.
Okay. Well, Mr. Karwa, let me pick up from what Mr. Kacholia said, that there is an air of exuberance. Are you buying now at all? You have some very interesting themes, like, for instance, doubling of rural incomes, which the government is promising. On the basis of that, even now, are you a buyer in the market? Or do you think that this veneer of exuberance has to go?
See, there are pockets of segments where you can possibly say that stocks are overpriced, etc. So you have companies which are like 40 times earnings in the FMCG space, where you need to be careful, or where NBFCs have run up very aggressively in the last 3 to 6 months. So no doubt the business models of such companies are very strong and robust, but at what levels you enter is very important for you to make reasonable returns. But having said that, I have always been a firm believer that at all points of time, you have to keep on searching and you will find your bottoms-up ideas to invest in. So yes, if you are asking me that do you have 8, 10, 12 ideas, 15 ideas that you can possibly invest in at current levels, yes, there are many ideas that we believe that can over the next 2-3 years deliver good returns. So that is always there with us, as Prakash mentioned, that we are always, no doubt we take care or are cognizant of global and local macros, but finally at the end of the day it's all about bottoms up investing. My sense is that with the kind of global liquidity and the low interest rates which are floating in the system, or rather negative interest rates, I think we have to reset the way we invest into companies, because this is something which we have never ever seen, negative interest rates. Yeah. So the whole idea about what are your return expectations, I think that it's set for Indian investors, they will have to reset in an environment where global interest rates being what they are, and also local interest rates are coming off. So here your return expectations from going forward, if your GSEC bond yield, etc., are around 7.2, 7.1, etc., then your expectations about what kind of returns you are expecting from your equity investments, that has to be tempered with A. And B, also in a global environment where growth is a challenge. So here we have a country which is a $2 trillion GDP growing at 7-8%. So I'm sure there would be various companies which would be available for investing opportunity. Also, I think investors now, earlier when you used to invest in Indian companies, the base was that the company is not growing by 18-20%, then it is not worth investing. I think that base itself is coming off now. If your companies are able to grow at 12 to 15%, and even if the return ratios, earlier you used to look at 20% plus kind of return ratios on return on equity or return on capital employed. But now if the companies are able to do even a 15-16% return on capital employed, investors are happy to look at such companies, evaluate them and look at for investing. So yes, so many ideas which we still have.
Okay, that's a fair point.